Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and there's a strange metric that implies a recession is coming. So, this has been covered over the last week by the bigger finance YouTube channels, but I thought I'd just provide you with a quick summary as I found this quite interesting. YouTuber ad revenue is down, despite views and viewer retention being up. So, usually, views and viewer retention is directly correlated to the YouTube ad revenue. So that would mean the more views you get and the longer the viewers watch your videos, the more YouTube ad revenue you're going to get, which makes sense if you think about it. In times of market volatility, people look for answers, which is why views and viewer retention have gone up. In a bull market, when you just buy the dip and hold it for a couple of weeks and you end up in profit, everyone's a genius in a bull market, right? There's no sort of pressure to beef up your education and understanding of things. But in times of large volatility, as we've had for the prior few months, or pretty much all of this year, people go looking for answers. They start to question, oh, maybe I don't know what I'm doing. Maybe I need to be in gold instead of stocks, or maybe I need to be in stocks instead of gold. Whatever the reason, market volatility drives people towards watching more educational content and more sort of market content. And this would ordinarily lead to an increase in ad revenue. So how come ad revenue is down then? Well, it's simply because advertisers are, one, cutting back on their spending, and two, don't think they're getting enough bang for their buck. So this implies advertisers know that people are spending less money, which is a classic sign of recession. And if you think about this, it makes perfect sense. All the while, people are flush with cash and happy and confident in the economy and their job security, they are much more likely to spend money. That's not just on advert click-throughs. The advertisers clearly know that people are watching ads and no longer willing to click through. The click-through rate for ads is obviously much lower. This also implies that people are being more frugal with their money and holding back. So even if they want to click on the adverts, or maybe they are clicking on the adverts, but they're not following through and making the purchases, and this is another sign of a recession. So this is just a bit of a different metric that sort of uses these more classical signs of a recession, i.e. people cutting back with spending, and i.e. people not having as much confidence in their ability to survive the coming months, and therefore cutting back. Or, of course, physically being forced to cut back because prices everywhere have gone up and your wages won't have. I thought this was just an interesting way of seeing this through a lens that I ordinarily wouldn't. If searching on YouTube will turn up the videos of the bigger channels if you want to see the full details. So moving on, the supply last active 1+ years ago, the rate of change Z-score, I've showed this a few times. We have moved into the green and we're now left. Not saying, Plan C says, not saying the Bitcoin bottom is in, just providing data. Never rely on one metric, blah, 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 blah. But you can see whenever this happened before, it led to an enormous bull run. It's actually marked all of the prior bottoms. So, with the exception of the COVID crash. So did we just see the bottom? Many people will be saying no, because of the macro conditions are not supportive. But stick around, I'm going to show you exactly why they just might be soon enough. This is the S&P 500 chart, and I've marked here a vertical blue line to show the 3rd of October 2011. And you can see here we made a low, and then from there went on to form a huge rally. The following day after this low, we had a central bank pivot, okay? A pivot to a more dovish stance. I've got another case here, the 12th of February 2016. We formed this sort of double bottom, and then look, started an enormous uptrend. This was on the 12th of February that we formed a low, and this was coupled with, here's the 11th of February 2016, Yellen saying negative rates possible in the US, i.e. a dovish pivot. This was bloody October. I remember this is very fresh in my mind. It wasn't too long ago, the 4th of October 2018, and we started a decline that lasted all the way until Christmas Eve, as marked by this blue line. It was only a few trading days later, on January the 4th, that the Fed Chief Powell underwent a dovish pivot. Okay, and I marked that here in the green, and you can see that the moment the market got the pivot, I mean, this was front run a little bit, probably by Wall Street. But you can see the moment we got the pivot, we go on this enormous rally. And so that brings us to today. Here we are today. If you've been watching the channel, you will have seen this chart plenty of times. But Why have I marked this one in yellow in the 1st of September? Well, because the Fed is signalling that we might get some form of dovish pivot in September. So I don't know if we're going to get that. I don't know what's going to happen. Nobody does. But what seems likely is that they're sort of already prepping for this. Make sure you stick around, because I'm going to show you something that's really quite mind-blowing in just a second that supports this. Just before I get into this next bit, which supports all of the dovishness, it's fair to point out, it's worth noting that to have a Fed pivot, it doesn't necessarily have to be a rate hike pause, okay? They don't have to necessarily undo that immediately. Remember, markets are going to rally if any of the following are signaled. So we could have better inflation data related to wages, forward-looking interest rates could be revised. Fed is even slightly more dovish or accommodating to markets. All it really has to say is that they're prepared to do whatever it takes to make sure that we don't get an enormous market crash. Markets are forward-looking and they will price this in. Peace between these two places, if that was a breakout, markets are going to rally. And then finally, economic data. All it would take is for, whether it's real or fudged data, as long as the economic data supports the Fed easing back, the Fed at the moment taking a very, very hawkish stance, not accommodated to markets. They're selling this narrative that they want to fight inflation. But remember, any of these things will be taken as a dovish pivot. Okay? So how come I'm so confident we're going to get this soon? That's the big question. Like, I know they've told us that there, and maybe they undo it, maybe they cancel it. And if you look at recent news, they're trying to underplay this. They're saying, well, don't get your hopes up of a pause in September because inflation's out of control, blah, blah, blah. But this is why I'm so confident that we see new highs before we get the big crash. Nancy Pelosi, has just bought at least $1 million worth of Apple and Microsoft shares, deep in the money call options. Okay, so not shares, but call options. So this means that Pelosi, the queen of insider trading, is more than confident that she is going to make big money over the next few months from Apple and Microsoft. At the same time, lest we forget that all of these Fed officials were allowed to get out of they were all buying massively after this plunge, after the big outbreak that happened around the world. You know what I'm talking about. We got that. All of these insiders at Congress were allowed out the market at the top under this fake narrative of Congress moves to ban members from trading stocks as Pelosi drops opposition. Okay? So the queen of insider trading, people are starting to get very rubbed up the wrong way about this, and rightly so, that she happens to buy shares in Big Pharma right before these companies announce medicines that are going to be sold worldwide in response to the very thing that caused this plunge, right? That's one of many examples. They're known to buy like ammo stocks before the invasion that I mentioned. Where is it? Back here. They're known to do things like buy stock in, in weapons companies and stuff right before this sort of thing occurs. You can go and check this for yourself. Don't take my word for it. Go and search this, but you'll find it. Anyway, would the queen of insider trading be buying this stuff if there wasn't a new all-time high coming in the stock market? So I don't know when, but we do know that there's likely going to be a pivot round here that will catalyze the breakout of this trend line at the top, wherever it comes, and that we will see new highs by the end of this year, probably ahead of the November elections, right? And possibly it will run into early next year. Then you can bet your bottom dollar that only once the markets are at full, fresh, new all-time highs, that Congress will actually be, and I say this lightly, banned from trading stocks. That's when this will follow through. They'll be let out right at the top here, okay? And then we will finally see the big crash, the big Great Depression 2.0 that everyone has been worried about for all of this time in here. This is nothing, okay? When it comes, it's going to be enormous. But as I've been saying for a long time, I'm very confident that we're not there yet. And this is just another piece of evidence that tells me I'm right in my hypothesis. My hypothesis is going to be right in the next few months. Insiders from Congress that are guilty of insider trading all the time do not buy huge amounts of stock if we have already topped, if there is not a new all-time high to come. She's got it. If you go and check her record, she's the greatest trader of all time, okay? So we're likely going to see new all-time highs this year. I'm becoming increasingly more confident that this is going to turn out to be true. At the same time, is this a paradigm shift? I've showed this chart before, and we were down here somewhere 2.8 or something. So are we going to see a paradigm shift up here, or is this going to form a lower high / a double top and then roll over? When the central banks print money, they don't just print money and keep it in their pocket or in their bank account. A lot of what they do, a lot of the way they issue this freshly printed money is to buy bonds. Okay, so they print the money and then they buy bonds. You tell me, is buying bonds conducive? So i.e. is inflation, which we know is coming soon to prop everything back up, is it conducive to seeing higher yields, which are inversely correlated to the price of bonds? No. Inflation and printing money to buy bonds will drive the yield down. Okay, so again, more stars are aligning for this. We're getting close. I'm convinced of this. In the meantime, Bitcoin transactions up to $200 will be tax-free under the new bill, the new Bitcoin bill, the new crypto bill, encouraging use as currency. In yesterday's video, I showed you that Lightning is scalable beyond what Visa and MasterCard are capable of in terms of transactions per second. So this notion that Bitcoin cannot be used as a currency, that it's failed as a currency because it's too slow and is not scalable, look at this. This is, this falling broadening wedge, rising broadening wedge, trend line, down into a falling wedge at a point with a retest on the channel and then go. And if you look, falling broadening wedge, rising broadening wedge, trend line to a sharp point in a falling wedge that retests, just like we did here, the channel trend line support. So are we about to see this big bounce? I think quite possibly. The thing is, as I keep saying, it all comes down to this Fed pivot, but as I've already covered in this video, that is close, I reckon. So here's the dollar. On its way perhaps to make a lower high, or does it want to sweep the lows first and then go? I don't know. I'm not going to pretend to know. Maybe it just grinds sideways along this line before breaking down. Got this marked here, if you don't know, because this is when Bitcoin is due to print a cycle low, 60-day cycle low, so plus or minus, say, 6 days. But we're keeping our eye on that. For now, we're just watching this. The little rise is putting some pressure on my positions, which we'll get to in a minute. But as I keep saying, I'm expecting probably a lower high here, and then we can convincingly break down. So stock market's open. Here we go. Are we? Yeah, I don't know. Still sideways, really, aren't we? It's this little flag we got going on. If it continues to go sideways, then we're going to have very clear invalidation, because pretty much we're either going to break down from this, or there we go, we'll end up like that. So this is nice. Are we going to hit double support? Are we going to hit double resistance here? I don't know, but realistically the plan is still the same. Try to push this trade as much as I can, and hopefully we can get up here. We'll see how it goes though. We have got gold got slapped down a bit yesterday. I'm hoping to see a higher high here. That would be a good sign of strength. This was not a very convincing higher high, and it got slapped down straight away. So, but as I keep saying, all the while we're in this wedge, that is fine by me. My silver position, we made a higher high again, a couple of higher highs, and then got slapped down. So maybe we can keep pushing. Things should start to get pretty exciting for silver once we get up to this 23.3-ish level. But for now, just long and strong, holding on. Bitcoin is hilarious to me at the just lately. We get one of these little, well, I say little, 5 or 6% pump, and all of Twitter explodes, and this is the bull market starting, and blah 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 blah. But it gets slapped back down. Ultimately, we are still sideways, aren't we? We are still inside of one of these consolidation cycles. I'm not saying we have to follow the shape of it, but ultimately we are likely going to do this. It occurred to me after making yesterday's video that there's another possible path Bitcoin could take from here. Where's my polyline here? So we could potentially sort of end up breaking this trend line. I don't know how high we would go. This is arbitrary, really. And then dropping into that 60-day cycle low like this, and then going. So whilst I kind of favor the sideways sort of max pain, no one can get long or short for a while, lots of people get stopped out and chopped up along here, this seems like the most likely to me at the moment. But a more bullish look for Bitcoin would be if we can break this trend line and then drop down into the 60-day cycle low. This would be, in my opinion, setting up for a big run during summer. So we'll see about that, but that's possibly on the table. I just thought I'd better flag that. It occurred to me after yesterday's video that I should at least flag that. And lastly, is this the lower high for the bond yields? Is this it? Our market's going to price in ahead of time that what I was saying earlier about this paradigm shift not being a paradigm shift and in fact being a mean reversion, i.e., are they going to print? Yes. And what does printing mean? Lower yields. Is this what we're about to see? Or are we going to get a continuation to new highs? I don't know. But like I said, we're going to keep an eye on that, continue to keep an eye on that. The stars are aligning, a little bit more patience, and there's going to be some serious money to be made. So I hope you enjoyed today's episode. I hope you're doing well in life. I hope you're doing well emotionally, physically, spiritually. I hope you're enjoying the content. I'm really enjoying making it. So if you're not subscribed, go ahead and do that. If you haven't liked the video, go ahead and do that. Follow me on Twitter, and I will see you tomorrow. Take care. All the best. Bye.